What you are looking at is an engulfing candlestick pattern, and I will show you the power hidden behind it. This is how it looks on a daily time frame. As you can see, it looks perfect. And this is how it looks on 1 hour time frame. So I want you to notice one thing. So things look perfect in a daily time frame. But when you go to a smaller time frame, things look a little bit not perfect, not obvious. And this is where it gets interesting. And this is where we'll spend a lot of time going to details step by step so that you can master this candle tool in your trading career. Let's start by defining what this candle is. And you probably know it, but let me simplify it for you in details. So what you're looking at is a bullish engulfing candle example. As you can see here on the chart, we don't count the wicks of this candle. We're only counting the bodies of this candle, the shaded areas of the candle. And the bullish engulfing starts off by this smaller candle here, which is a red bearish candle. And it's followed by this engulfing big candle. So what is important here is that the bullish engulfing candle should be bigger than the engulfed candle, which is a smaller red candle inside it. So as you can see, it should be within the body of the bullish engulfing candle. So next, let's look into the bearish engulfing candle. So the bearish engulfing candle follows similar characteristics to the bullish engulfing candle. As you can see here also, we don't count the wicks. We count the bodies of the candle. And the bearish engulfing candle starts off by this smaller green candle, which is a bullish candle, followed by this big red engulfing candle that is going down. So also here, what is important here is that this big bearish engulfing candle should engulf this bullish engulfing candle. So it should be within the body of the bearish engulfing candle. And you'll notice that sometimes it's equal to the body, which is most examples like in here, that is accepted too, as long as it's within the body of this bearish engulfing candle. Now let's get into the hidden power of engulfing candle. So we'll start with the perfect example. And as you can see, we are in a daily time frame. And as you can see that we are in an uptrend, which is very important, by the way, for this type of trading to identify the trend correctly. Then along this uptrend, you spot a bullish engulfing candle. And now we're gonna unlock the information that is hidden behind this bullish engulfing candle that you see here. Because at this stage, it looks like a perfect candle, but we don't see the details behind it. Now we'll go into a smaller time frame to see the details behind this candle. When you look at it in a smaller time frame, it looks a little bit busy, but I will explain to you which part is which using this example, which is a perfect candle in a daily time frame. Now, of course, as you can see, we're in 1 hour time frame, and this red candle that we have seen in a daily time frame corresponds with this part of the chart in smaller time frame. So basically, this is a representative of a daily candle in a 1 hour chart. These lines are daily separating lines. So basically, day started here and it ended here, and it started here and it ended here. So again, this is a red bearish candle that you are seeing here, this one, followed by this bullish engulfing candle, which is this candle. So what you need to focus on this chart is that the bullish engulfing candle should be very strong, as you can see. So it started off strong and continued getting more strong and pushed up and reached this level basically in a stronger manner. And the smaller pullback, as you can see, this pullback is also a struggling pullback because you can see the wicks that are pushing the market up. So this is the strongest bullish engulfing candle that you always want to see. This is a high probability bullish engulfing candle setup. So now I'll show you a bad example of a bullish engulfing candle. An example that you shouldn't take because it will prevent you from being profitable. It's very hard to be profitable that way if you trade that kind of candle. Now let me show you. So if you're looking into this chart, again, we are in a daily time frame now, and you spot a good uptrend. Next, along this uptrend, you spot a bullish engulfing candle. It looks perfect like the previous bullish engulfing candle. Nothing suspicious at this stage. Now, let's reveal what's hidden behind this candle so that we know why it's a bad example of the bullish engulfing candle. So when you go to a smaller time frame, as you can see, we are in 1 hour time frame. Obviously, there's this daily separating period. So the day starts here and ends here, and another day will start here and will end here. So now you can see this is the red candle that we have seen in our daily time frame. This is the very small red candle, and it's followed by the bullish green candle that we have seen in the daily time frame. But now if you look at this one started off with some power, and the power faded slowly going up, and a big wipe out came, which wiped almost the whole candle. And another push was attempted, which was quickly wiped. And another push going forward was attempted, which you can see it's like a dying push. So now if you look into this candle, it doesn't really suggest that the market is pushing up in a stronger manner. It doesn't suggest that you can take a trade. So now that's the part about analyzing these kinds of candles. So you shouldn't look on the good looking candle in a daily time frame, for example, and take a trade from there. You need to come down to a smaller time frame to see the building blocks of this candle. As you can see here, the building blocks is not suggesting that you should take a trade at all. And it's the opposite of what we have seen on the successful example. So going forward, make sure you take into account this kind of information when you're trading engulfing candles. Now comes an even more important part of this video, which is where you should be taking these trades. Basically the location of which you should be taking these trades. So basically what you're looking at is a good uptrend. Very strong, and you never doubt it a second that it's an uptrend. And this is an example of the failed trade. So basically always we start by analyzing whether it's an uptrend or a downtrend, and it should be a proper trend, as you can see. Then alongside that uptrend you will see the pullbacks, and these pullbacks should be struggling. As you can see, it should never be a strong pullback. It's something that you can identify using your eyes to see if this compares to this swing or not. So basically in this case, this is the flat pullback that you want to see. And you don't want to see something like this, but this is still counts because there's a lot of tails, but that's a little bit advanced. But the rule of thumb is that the pullbacks should be flat, like this one. This one would be the perfect one to be flat. So make sure that the pullback doesn't have any strength going down if it's an uptrend, or going up if it's a downtrend. Then after that pullback, you will notice the engulfing candlestick pattern that you want to trade. And also by the time you see that engulfing candle, it symbolizes that the pullback has ended. So that's another rule of thumb. Immediately you see an engulfing candle, that means that the pullback is either ending or has ended. Then this is when you take the trade. So the trade that you take this way will always be higher probability trade. So if you take engulfing candlestick patterns like this, then there's almost no way that you will lose trades. Obviously, you need to apply the money management into your trading. By the way, please leave a comment below if you want me to make a video about money management. I've exposed the pin bar hidden information which will make you stop losing trades. Check it out on this video.